10 terms that every young person should know, especially about finances. Let's do this. Now, allow me again to bring in another term that you should also know when you are investing or when you're talking about finances. Principal. Okay? Now, what is principal? Principal is the initial investment or initial money or capital that you put aside for an investment. Okay? That's the initial amount of money that you put in towards an investment. That is called the principal. Okay? Now, let me go back to compound interest. Okay? Remember, compound interest is interest on interest. All right, great. Now, what is interest on interest? Okay? Now, I've talked about principal, and principal is the initial investment that you make. Okay? So that amount is called the principal. So when you talk about compound interest, it is the interest on the principal plus the interest from the previous day or the previous month, depending on the type of investment. Okay? Great. Now, let's say our principal is 5,000 shillings. Okay? Principal is 5,000 shillings. And let's say we're investing somewhere that gives us 10% return every month. Okay? So what does that mean? That means that every month we are going to get 10% of 5,000, which is correct, 500, right? Now, that means next month we'll get, our investment will be the principal plus the interest. So it will be 5,000 plus 500, okay? Now, when you talk about compounding, now from the other month, the interest will now be calculated from 5,500 and not the initial 5,000, which was the principal. You get? So it's interest on interest. Now that is compound interest. All right? Great. Another term that you should know if you're a young person and you're thinking about this thing called wealth creation or just managing your finances, another term that you should know is net worth. So what is net worth? Okay? So net worth, again, I'm going to use words that I've explained a bit earlier to explain what net worth is. Okay? So net worth is simply, remember when you're talking about what you owe versus what you own. You remember? Liabilities versus assets. Now, net worth is the difference between what you own and what you owe. Okay? So, the assets that you have, those are the things that you owe. When you minus what you owe others, that is your liabilities, now that becomes your net worth. Okay? So, in simple terms, net worth is equals to assets minus liabilities. Great. But remember, we always need to be building our assets. And remember what you said, an asset is something of value that you own that puts money in your pockets. Great, I see you're following. Another term that you should know when you're talking about finances is inflation. Now, what is inflation? In simple terms, inflation is simply the change in prices of goods and services over a period of time. Okay? Now, a very good analogy we use to explain what inflation is bread. Do you remember the first time you were sent to buy bread in the shops by your folks? Right? How much was it? And how much is bread now? Now that is inflation. Okay? Simply the change of price in goods and services over a period of time. Okay? Now, another explanation of inflation is, or another way I can try and explain inflation is, remember a year or 2 years ago, if you had like 1,000 Kenya shillings note and how much you would walk out of a supermarket with? and then take the same 1,000 note today and go to the same supermarket and see whether you will walk out with more goods or less goods. You're correct, less goods. So that is inflation. Simply the increase of prices of goods and services over time. All right? Great. Now, another term that you should know when you're talking about finances is liquidity. I know you've heard about that word. You've heard that word somewhere. Now, what does liquidity mean? Okay? Now, in matters of finances, when you talk about liquid, that means cash that is available to you maybe in your pockets or in your bank. Okay? So it is cash that you can easily access. All right? So liquidity is simply that. Cash that you can easily access. For example, money that is in your pocket, in your wallet, in your phone, or in your bank account. Okay? Now we call that liquid cash or liquid assets. All right? Now, why we're talking about liquidity is you always hear people say you need to be liquid. Okay? That's why I'm explaining this term, liquidity. Okay? Now, there are investments that you might make, or there are places where you might put your money and you're not able to get this money immediately. Now, that means that those places, or how you placed your money, is in places that are not liquid. Okay? For example, if you buy land today, that process is very long. And also, if you want to sell that land again, you will have to wait for a couple of months, okay, before the actual sale is complete. So, in simple terms, land is not liquid, but cash that you have in your M-Pesa is liquid. Cash that you have in your pocket is liquid. All right? Yes. So that is liquidity. Great. That's been me, Mike. See you on the next one.